The story we were told about money has cracks that can no longer be hidden. For decades, we were led to believe that leaving our capital in a bank was the safest way to grow it. But the reality is very different. Silently, like an underground stream, inflation erodes the value of every bill you hold. What yesterday bought abundance is barely enough today for necessities. Imagine this. Your account increases a few dollars a year in interest, but over that same period, the price of goods rises much faster. It's like running on a treadmill. You sweat, you strive, but you stay in the same place. On this journey, we're going to shatter that illusion. I'll reveal concrete strategies to ensure your money not only survives, but multiplies, even in times of uncertainty. And as you listen, I want you to think about this. If prosperity were a seed, are you watering it in fertile soil or in dry ground? Write to me in the comments, I choose fertile soil, to begin manifesting it. Strategy 1. The brilliant refuge, the power of gold. Throughout history, gold has been much more than a shiny metal. It has been a universal symbol of wealth, a language understood by everyone from Egyptian pharaohs to Wall Street bankers. It doesn't depend on a government to maintain its value. It doesn't need a bank to back it. Gold is value in itself. During major crises, from the stock market crash of 1929 to the runaway inflation of the 1970s, those who held gold managed to retain their purchasing power, while paper money dissolved like sand through their fingers. Between 2001 and 2024, the dollar lost around 80% of its purchasing power. In that same period, gold went from $264 an ounce to over $1,600, increasing more than six-fold. If you had invested $10,000 in gold at the beginning of the century, you would have more than $60,000 today, not to mention the peace of mind of knowing your investment wasn't dependent on a political decision. And the best part is that thanks to technology, you no longer need to keep bullion in a safe. You can invest through exchange-traded funds, ETFs, backed by physical gold, or in mining companies like Franco-Nevada Corporation, whose shares have appreciated more than 600% since 2007. Gold isn't a get-rich-quick scheme. It's a financial shield, a policy against inflation and economic chaos. Because in times when everything seems to be shaky, its brilliance doesn't dim. On the contrary, it intensifies. Strategy 2. The new white gold, lithium and industrial raw materials. The world is experiencing a second industrial revolution, but this time the spark comes not from coal, but from electricity stored in batteries. And at the heart of this transformation are minerals such as lithium, nickel, and copper, the invisible building blocks of the future. Lithium, known as the new white gold, is indispensable for the batteries that power our phones, computers, electric cars, and soon short-haul aircraft. Today, more than 95% of rechargeable batteries contain lithium in some form. The numbers speak for themselves. Between 2020 and 2022, the price of lithium carbonate rose from $8,000 to more than $70,000 per ton. This growth of more than 800% was no coincidence, but the result of a global demand that is far from diminishing. Companies like Mineral Resources Limited, dedicated to lithium mining and processing in Australia, saw their shares almost quadruple in just 5 years. Someone who invested $200 in 2019 would have nearly $800 today. Investing in these raw materials isn't following a technological fad. It's betting on the energy heart of the coming decades. Because oil had its century, but the future belongs to clean energy, and these metals are its fuel. Write it in the comments as a personal promise. Nothing stops me. Everything drives me. Strategy 3. Currencies that don't tremble. The Swiss franc and other safe haven currencies. In the financial world, there are currencies that, like beacons in the fog, remain steadfast when everything else is shaky. The Swiss franc is one of them. During the 2008 financial crisis, as banks collapsed and markets turned red, foreign capital inflows into Switzerland increased 16-fold. This was no coincidence. The country has a centuries-old tradition of political neutrality, a diversified economy, and a banking system known for its discretion and solidity. Historically, the Swiss franc has shown much lower volatility than other currencies, even in global crisis scenarios. Over the past 20 years, its exchange rate against the dollar and the euro has demonstrated a resilience that many investors compare to the performance of gold. It doesn't grow explosively, but it doesn't plummet when the storm hits. Keeping a portion of your portfolio in Swiss francs or other safe haven currencies like the Singapore dollar or the Norwegian krone can be like anchoring your ship in a safe bay while the rest of the vessels struggle with waves several meters high. In times of uncertainty, that anchor can mean the difference between survival and financial shipwreck. Strategy 4. The deal with the state. Treasury bonds. Sometimes the best move in a chess game isn't to attack, but to consolidate the defense. In investment, that defense can take the form of U.S. Treasury bonds. These instruments are, in essence, loans that investors make to the U.S. government. Their appeal lies in the fact that the U.S. government can't run out of dollars to pay its debt, because it is the issuer of that currency. This makes them one of the safest assets on the planet. During periods of recession or stock market panic, treasury bonds often act as a buffer. While stocks fall, these assets tend to maintain or even increase their value. For example, during the COVID-19 crisis in March 2020, the S&P 500 index lost more than 30% in just a few weeks. But 10-year treasury bonds saw their yield fall and therefore increase in price by more than 50%, benefiting those who already held them. They don't offer spectacular returns, but they do offer a stability that allows investors to sleep soundly, knowing that part of their capital is protected from the chaos of the markets. Declare it in the comments as a commitment to yourself. I accept success, money, and happiness in my life. Strategy 5. The silent power of value stocks. In the stock market, there are companies that behave like marathon runners. They don't take off like a rocket, but they cover long distances with a steady stride. These are the so-called value stocks, established companies with stable revenues, indispensable products, and, in many cases, decades of history. Unlike growth stocks, which seek to multiply rapidly and assume more risk, value stocks offer stability and consistent dividends. Companies like Nucor, a leading producer of industrial metals, have weathered global crises unwaveringly, rewarding their shareholders not only with appreciation but also with regular payouts. This category also includes energy giants, utility companies, and industries with a strong international presence. A historical example, between 2000 and 2010, while the tech bubble and the financial crisis destroyed the value of many companies, several value stocks held their own, offering dividends that, when reinvested, increased investors' total capital. And if you don't have time to analyze balance sheets or trends, index or managed funds, like those from BlackRock, allow you to gain exposure to dozens of these companies at once, reducing risk and leveraging the strength of a global portfolio. Strategy 6. The asset that can't be manufactured anymore. Land and real estate. Land has a unique quality that makes it an irresistible investment. It can't be manufactured anymore. Every square meter that exists today will be the same in 100 years. And as the world's population grows, the demand for usable, habitable space continues to rise. Real estate has proven to be one of the most solid long-term assets. In 1992, the median home price in the United States was $119,500. Today, that figure exceeds $417,000, and that's not even considering the passive income that properties can generate through rentals. But investing in this sector doesn't necessarily mean buying an entire house. REITs, real estate investment trusts, allow you to acquire a fraction of high-value properties, from hospitals to shopping centers to residential buildings, and receive a share of the income generated. This democratizes access to the real estate market and offers diversification even with limited capital. Investing in land or real estate isn't just about acquiring an asset. It's about owning a limited, tangible, and inflation-resistant resource. Those who understand this know they're not buying bricks or acres. They're buying time and financial security. Write it down as a commitment to yourself. Nothing stops me. Everything drives me. Strategy 7. Treasures that grow over the years. Collectibles. In the world of investments, there are assets that aren't listed on the stock market, but can far outperform many indices. Collectibles. A classic car, a one-of-a-kind work of art, a limited edition watch. They're not just beautiful pieces or status symbols, but containers of value that, over time, can become true treasures. Their power lies in scarcity. The more limited a good is, the more coveted it becomes over time. It's no coincidence that in 2020, a 1955 Mercedes-Benz 300 SLR Uhlenhaut Coupe sold for $142 million, setting a world record. That car wasn't just a vehicle, it was a piece of history with a narrative impossible to replicate. The art and collectibles market, according to Deloitte data, moves more than $65 billion annually. And in times of economic instability, many investors turn to it seeking a refuge that combines passion and profitability. However, it's not about buying just any old item. It requires knowledge, certified authenticity, and a long-term vision. Investing in collectibles is like planting a rare tree in your garden. Its shade won't be immediate, but when it grows, it will be unique. Write it as a reminder in the comments. I am prosperous and I attract wealth. Strategy 8. The shield against inflation, investment in renewable energy. The global economy is at a point of no return. The transition to clean energy is not a fad, it's urgent. Climate change, regulatory pressure, and technological advances are pushing countries and companies to abandon fossil fuels and embrace sources such as solar, wind, and green hydrogen. The growth potential is immense. According to the International Energy Agency, more than $4 trillion will be invested annually in renewable energy by 2030. And while traditional raw materials are affected by geopolitical tensions, these new sources offer a double advantage: future profitability and protection against inflation. Companies such as NextEra Energy and Vestas Wind Systems have seen a significant increase in their stock market value over the last decade, and funds specializing in energy transition are multiplying. Furthermore, governments around the world are offering tax incentives, subsidies, and loans to boost this sector, reducing risks for investors. Investing in renewables means investing in a world where energy doesn't depend on dwindling wells, but on inexhaustible sources. It's investing in a more stable future, both for the planet and for your portfolio. Strategy 9. The art of diversification. In investing, the phrase, "don't put all your eggs in one basket," is more than just popular advice. It's a rule of financial survival. Diversification means distributing your capital across different asset classes, so that if one fails, others can support it. A well-designed portfolio can combine safe assets like treasury bonds or index funds, safe havens like gold or real estate, and growth bets like tech stocks or startups. This balance allows you to weather economic crises without your entire capital collapsing. A Vanguard study revealed that diversification can reduce a portfolio's volatility by up to 30% without significantly sacrificing long-term returns. In other words, you gain stability without sacrificing growth. Think of your portfolio as a ship with several lifelines. If one floods, the others keep the ship afloat. That is the true strength of an investor who understands that strategic intelligence outweighs the adrenaline rush of single bets. Strategy 10. Invest in yourself. Among all possible investments, there is one that no market can take away from you: investment in yourself. Your skills, your knowledge, and your ability to adapt to economic changes are the most valuable asset you will ever have. Learning a new language can open up international markets. Mastering digital skills can multiply your employability and income. Even improving your financial intelligence allows you to make better decisions, avoiding mistakes that cost years of work. According to a report by the Organization for Economic Cooperation and Development, OECD, each additional year of formal education can increase your income by an average of 10% over your working life. And continuing education, even outside the traditional system, can generate much higher returns than many stock market investments. Investing in yourself has no expiration date. Knowledge doesn't rust, doesn't depreciate, and doesn't pay taxes. Write it in the comments as a personal statement. Nothing stops me. Everything drives me. Money, in essence, is energy. And like all energy, it needs movement to multiply. Leaving it motionless in a bank is like keeping water in a jar. Sooner or later, it stagnates. You decide if you want to be a spectator of your own finances or an architect of your prosperity. If this message resonated with you, it's no coincidence. It means you're ready to take the next step. Subscribe and join me on this path to financial freedom.